Did you know that a single announcement today could potentially reshape the lives of thousands of exotic currency investors worldwide? Right now, millions are watching the foreign exchange market, yet very few truly understand the opportunity that sits in front of them. On September 21st, 2025, the United States confirmed a new official rate of 0.804, the Iraqi dinar. This move has instantly caught global attention and stirred conversations across the retail investor community. And make no mistake, this isn't just another minor adjustment. It could mark a major turning point for holders of both the Iraqi dinar and the Vietnamese Dong. While mainstream media outlets are busy covering the dollar, euro, or yen, exotic currencies move under an entirely different set of rules. Today we're diving deep into what this confirmation means for IQD and VND holders, how it impacts the broader market, and why 2025 may finally be the year these currencies claim long overdue recognition. Exotic currencies like the Iraqi dinar and Vietnamese Dong operate in a completely separate zone compared to major currencies. Unlike the US dollar or the euro, which are traded in massive volumes by the world's biggest banks every single day, the IQD and VND remain in the thinly traded category. In fact, nearly 80% of all foreign exchange transactions are controlled by the big banks, leaving just 20% for retail investors and smaller firms. And it's within this 20% that exotic currencies live and breathe. This means retail traders are stepping into a unique environment, one that carries high risk, but also the possibility of extraordinary reward. Most investors don't realize how differently these markets behave. Confirmations like today's new 0.80 rate for the dinar are not just simple numbers on a screen. They represent buying power that, if properly leveraged, can completely reshape investor portfolios over time. So why do exotic currencies move in such a different way? One of the biggest reasons is liquidity. Liquidity refers to how easily you can buy or sell a currency without pushing its price up or down. For highly liquid currencies like the US dollar or Japanese yen, banks can move billions without shifting the price at all. But exotic currencies are thinly traded. That means even relatively small buys or sells can trigger visible fluctuations. Large banks avoid them not because they lack potential, but because trading in such low liquidity environments requires precision and caution. Retail investors, on the other hand, have the ability to maneuver patiently. They understand that even minor surges in demand can generate major gains, particularly when news like today's confirmed dinar rate hits the market. Another reason big institutions shy away from exotic currencies is the web of regulatory requirements. Every country imposes its own financial rules, compliance standards, and monetary frameworks. This creates barriers for banks trying to trade globally at scale. Take the Iraqi dinar as an example. Governed by Iraq's monetary authorities and monitored more closely now by the US Treasury. For global institutions, that complexity slows them down. For informed investors, however, it's a signal. When the US officially confirms a rate, it introduces legitimacy and regulatory validation. That signal provides confidence for retail traders to act strategically, even as large banks remain focused on their high-volume, low-risk trades. Now, the confirmed rate of 0.804 the Iraqi dinar is meaningful for multiple reasons. Above all, it reflects a potential value increase that could be life-changing for investors who purchased IQD at much lower levels. For anyone who bought when the dinar was priced significantly below today's confirmed rate, the percentage gains are staggering. But this doesn't play out in the same way it does with major currencies. When the dollar shifts, the effect is immediate across the entire market. With exotic currencies, realizing gains often involves finding specialized dealers, navigating fees, and sometimes waiting for liquidity to catch up. This makes today's news both thrilling and complex. Those who know how to navigate the system will be positioned to maximize the opportunity. Vietnamese Dong investors should also take note of this development. While today's spotlight is firmly on the dinar, the VND is slowly building its own momentum. Vietnam's booming manufacturing and export-driven economy is attracting foreign investment like never before. As this demand increases, so does the relevance of its currency. Like the dinar, the Dong also operates in the 20% retail slice of the Forex market, where activity is shaped less by global banks and more by specialized traders and individual investors. Today's confirmed rate for the dinar underscores a broader truth: exotic currencies can leap when economic and political conditions align, and the dong may be closer to such a leap than many realize. Political stability is one of the biggest drivers behind these developments. Iraq has made steady progress in oil production, government reforms, and collaboration with global financial regulators, all of which strengthen its foundation for currency growth. Vietnam, on the other hand, continues to expand its role as a global manufacturing hub, consistently attracting outside capital and investment. These factors build confidence for retail investors watching exotic currencies closely. The announcement of the new dinar rate I-CENT, a one-off headline it, as part of a growing trend of economic resilience and reform that investors must evaluate carefully. Understanding the 80-20 rule in Forex is critical for exotic currency investors. Around 80% of transactions are dominated by big banks trading major currencies, leaving the other 20% for retail, smaller firms, and exotic trades. This smaller slice of the market may feel riskier and less predictable, but it's also where the biggest overlooked opportunities exist. Today's 0.80 confirmation for the dinar highlights the true potential of this space. It demonstrates how investors outside the institutional mainstream can sometimes benefit more than banks themselves, simply by being willing to play in this unique corner of the market. Counterparty risk is another reason exotic currencies function differently. Big banks require large, reliable pools of buyers and sellers to complete trades. Exotic currencies often lack those deep markets, increasing the risk of failed trades at scale. Retail investors, however, usually work through niche brokers and specialized networks to handle this issue. Today's confirmation gives them a clearer benchmark, reducing uncertainty and boosting confidence. For both IQD and VND holders, the ability to navigate carefully, connect with reliable counterparties, and understand the timing of trades is essential to turning potential into actual profit. Many investors are asking, what does the 0.80 rate mean for my dinar holdings today? The answer: it signals opportunity, but it also demands strategy. Unlike stocks that can be sold instantly, exotic currencies require patience. Investors must often work with brokers, pay additional fees, or wait for demand to catch up. The long-term potential, however, outweighs these obstacles. By closely monitoring updates and timing their moves, retail investors can position themselves to benefit significantly from this confirmation in the months and years ahead. This September 21st update also reveals stronger coordination between U.S. regulators and Iraq's financial authorities. That cooperation is a cornerstone of credibility. Without it, any rate change would remain little more than speculation. Today's announcement is a clear sign of official recognition and oversight. For dinar holders, it represents more than just a number. It's an assurance of legitimacy. For Vietnamese Dong holders, the trend is similar. While the VND isn't yet widely traded by big institutions, its global recognition is rising. As that continues, retail investors in the 20% market space stand to benefit first. For investors, the key lesson is simple. Exotic currencies are higher risk, higher reward instruments. They don't behave like mainstream Forex assets. Their values shift on political stability, international recognition, and sudden bursts of demand. Today's dinar confirmation illustrates that principle perfectly. While the upside can be enormous, success depends on knowledge, timing, and patience. Those who understand these dynamics can outperform traditional investors chasing short-term moves in major currencies. The most practical step investors can take is to stay informed. Rate confirmations are milestones, not instant wealth triggers. Exotic currencies evolve at a slower pace than mainstream Forex, giving traders time to study, plan, and act carefully. To truly benefit, investors must work within the 20% market space, understand liquidity challenges, and establish reliable trading channels. Those who do will be the ones positioned to profit when new rates begin translating into real-world transactions. Timing is another factor that cannot be ignored. Announcements like today's often come before actual value changes flow through the market. For IQD holders, today is only the first step in a larger process. The next step involves finding trustworthy brokers and establishing trading strategies that reduce risk. Vietnamese Dong holders can apply the same patience, watching for incremental recognition that signals their moment is coming. By combining strategy with discipline, retail investors can take full advantage of these shifts. Managing expectations is equally important. Exotic currency investing is not a quick turnaround game. A confirmed dinar rate of 0.80 may represent massive growth potential. But investors need to accept that it will take time for that rate to filter through the market. The focus must remain on building knowledge, strengthening broker connections, and staying alert to political and economic updates. In doing so, retail investors gain a real edge over mainstream traders, who ignored this corner of Forex. Looking forward into 2025, there are genuine reasons to be cautiously optimistic. Iraq's growing stability, Vietnam's expanding global footprint, and the recognition of exotic currencies all point toward increasing relevance. While the 80% of the Forex world dominated by banks continues to play it safe with dollars, euros, and yen, the remaining 20% offers opportunities that can't be ignored. Today's confirmation is one piece of a larger trend that could shape the future of this market, making it one of the most exciting spaces to watch. In closing, the September 21st confirmation of the dinar S rate is not just another figure at S, a turning point. For IQD and VND holders, it represents a signal to pay close attention. The exotic currency market is unlike the mainstream it requires patience, awareness, and a readiness to act strategically. Yes, liquidity, regulatory challenges, and counterparty risks remain. But the reward potential for those who stay informed and disciplined is undeniable. As 2025 unfolds, investors who understand the 80/20 market structure and plan accordingly could be the ones to capitalize on one of the most significant opportunities in currency trading today.